Hi, good evening, everyone. Hi, good evening. Hi, everyone. Evening. Good evening, everyone. This is your first class, right? Good evening, everyone. Yeah. Today is the first class, isn't it? Yeah. Mm. Okay. Let's start. Okay. So I'll just give you my brief introduction. Those who don't know me means many of you might be knowing me, isn't it? Anyone was there earlier also? Many of you might be knowing me. Some of you might not be. Some of them might be the newcomers. Okay. Yeah. Sure. My name is Vishal Mantri, and I have been teaching CIIB since almost 2026 batches up till now. I was working with Citigroup, and I was working with DBS, Development Bank of Singapore. Then I was working with HDFC Bank earlier, and also in cooperative banks. It's not that I worked only in these big names. I worked in cooperative banks also. Okay. So starting from cooperative, I went to this all MNC banks. I was working in all the departments. Means retail, you call it. I worked in retail for almost 4 years. Then 3 years in corporate banking. Then almost 5 to 6 years in trade finance, and some part in treasury. So all the departments I've worked in, and that's why these details are have gone through my hands every time. Okay, and I worked at a senior levels also. Means starting from the senior level only. So that's why these things you are in the safe hands. Remember one part. Okay. Not to worry about this. Okay. Chalo. So almost everyone amongst you, right, might be working in retail banking or no. Is anyone working in trade finance, or is anyone working in corporate finance, or anyone working in treasury amongst you? Anyone? Is anyone working in trade finance or treasury, or even corporate banking, corporate finance? No, no. Generally retail only. Everyone is in retail. Yeah. Generally everyone is retail, right? Because nationalized banks, uh, main point I'll tell you, we start a career with retail banking, isn't it? In nationalized banks. And then very few of us go ahead. But I would always suggest here, take a one line from me. Hi, good evening. Take one line from me. Okay, not audible? Okay, for those whom I'm not audible, kindly log in and log out. Okay, log out and log in, everyone. Those who are not able to hear me or see me. Okay, yeah. So I'll tell you one important part. When you are working in retail bank, okay, never aim your life in retail bank only. Plan to work in some trade finance or treasury departments. These are the lucrative departments in banking or even corporate finance. These are the lucrative departments in banking. Very lucrative department. Trade finance, you'll get something else to learn, which you have not learned at all in your life up till now in retail banking. Okay. Huge risk factor, huge documentation, separate documentation. The markets are different. Everything is different over there. The customers, the loans of trade finance start from generally what, 100 crores or so. Okay. Means big loans. They start from that amount. Okay. So that's why always plan to go to some specific department. Don't plan your life in retail banking completely. Means throughout my career, I'll work in retail banking. No, don't do that. Okay. Chalo. Let's start with the topic then. Okay. So today's first topic is exchange rates. Exchange rates means exchange rate in the sense, what is the exchange rate? Actually, which bank? Means me. I was working in DBS, Development Bank of Singapore, my last bank. Then earlier I was working with Citigroup. Citigroup means Citibank. Citibank's trade finance department. Okay. I was working there, and before that I was working in HDFC Bank. Before that I was working with Cooperative Bank, Cosmos Bank. All from banking A to Z I've gone through. Okay. Chalo. So let's start with exchange rates now. Okay. See here, understand one simple logic of exchange rates. When is the exchange happening? When does the exchange happen? Okay. Let's come to the basics of exchange rate. When does the exchange happen? Suppose if you go to the market, okay, you go to the market to buy vegetables, right? What happens? How do you, what happens in the vegetable market? When you go to purchase, you get the vegetable and you give the money, right? It means what? When you are exchanging two things, one is vegetables and second is money, then only this market comes in picture. If that vegetable vendor is your relative and he gives that vegetable for free, is there any exchange happening? No, right? So exchange means it's a business, give and take. Only then exchange comes in place. Same thing in forex also. Exchange rates in banking relate to foreign exchange. Same thing happens in forex. Suppose if I'm giving loan in rupees here, I'll give you a simple example. If I'm giving my deposits, taking my deposits in rupees, okay, and say this, my deposit, I'm a bank, I'm taking my deposit, okay, in rupees and giving loans in rupees. Then what's the difference of exchange rate to me? Exchange rate won't hamper me at all because taking deposit in rupees, getting the money in rupees and giving the loans in rupees, same thing. When does the exchange rate come in picture? Exchange rate comes in picture when I'm taking the deposit in dollars and giving the loan in rupees. There is a exchange rate difference. So when there is a give and take between two currencies, only then exchange rate comes in picture. Got it? So now coming back to this point, what are the reasons? Now, what do you mean by this exchange rate actually? See here, $1 equals to roughly what is the rate now? 84, 85 rupees? Rupees 84, I'll take it for round. I'll take 84 rupees, isn't it? So $1 equals to 84 rupees. Means what? Yeah. Means what? One means if I have to purchase $1, I'll have to give 84 rupees to that person. Okay. So that is the meaning, means whenever I'm exchanging something, only then this picture comes in. Now, what are the reasons for which this 84 becomes 90 or it becomes 70? Why does this thing happen? So these things happen because of basic two types of reasons. One is fundamental, see this. This is known as fundamental reason, and second is technical reason. See here, have I given it? Yeah, technical reason. Okay. There are always two types of reasons. Technical reasons are always short term, very short term. And fundamental reasons are long term. Long means long duration. Okay. Now let's see one by one. Okay. Long term reasons. So one is balance of payment. Now what is this balance of payment? What do you understand by this term balance of payment? See here. In any country, yeah, topics are not visible. Topics are not visible. This, you are not able to see this? Everyone is able to see this slide, na? Balance of payment, economic growth rate, whatever I am showing you over here. Uh, okay, those who are not able to see it, kindly log out and log in. Okay, yeah. Now, what is this balance of payment? Okay, balance of payment means here. Uh, Kindly understand there are two parts always in any financial system of any country. Two parts. What are those two parts? One is I'll just remove this part, whatever is not required now. There are two parts. One is balance of payment, BOP, and second is BOT, balance of trade, BOT, balance of trade. Okay. There are always two parts in any country's economy. Balance of payment means what, and balance of trade means what? Balance of trade means here. What is the meaning of this word trade? Trade means business. Business means what? Import and export. Import and export. Okay. Whatever I do in import and export will be treated under balance of trade. Okay. Now, what is balance of payment then? Balance of payment means whatever is not there in import and export other than this. In the sense, if an NRI is sending some funds, NRI sending funds, or second part, somebody from India sending funds abroad, or somebody FII, foreign institutional investor, FII, where there is no export happening, okay, or this FDI coming in, these all come under BOP, balance of payment, where no exchange of goods and money is happening. That is called as BOP. Okay. Now, one important part, slide not visible. Shambhu, you log out and log in because others are able to see it. Okay. Yeah. So, balance of trade. Now, one important part you understand about this BOT and BOP. Very important part. When BOT is there, whatever is the net of this, suppose if I have, let's say, 70 rupees of import and 100 rupees of export. Okay. So what will happen now? Import is 70 rupees, export is 100 rupees, right? So what will be my net figure over here? 30 rupees. So 30 rupees will be what? Plus or minus? It will be plus because export means what? I am getting rupees 100 inside and sending rupees 70 outside. So my net is what? 30 rupees, right? So if this is my net, where will this net go in the end? This surplus will go where? Where should the surplus go? Now, this is an important question and this is an important point to think of. Okay. Remember, now what am I telling you? Everyone focus on this. This 30 rupees surplus which goes, it moves to BOP. Always remember, it moves to BOP. Okay. Whatever is the surplus goes to BOP. Okay. Now I'll give you one other line also. Suppose if import was 100 and export was 70, then I was 30 rupees negative. Then I would have taken rupees 30 from this BOP. Then I would have taken rupees 30 from this BOP. Got it? So ultimately remember this 30 rupees or whatever is the excess of BOT will always go to BOP, balance of payment. So who is the ultimate person? Who is the head? Who is the boss? Boss is BOP. BOT is just working under this BOP. Who is the boss? BOP. Got it? Every money in BOT is ultimately transferred to BOP, balance of payment. Okay? Net. Every money means net of that. Okay? So coming back, balance of payment. Generally, a surplus leads to stronger currency, while a deficit leads to weakened currency. Okay, means surplus means what? If I am having surplus amount, okay, if I am having surplus in this BOP, I am having huge funds in my BOP. Then what will happen? I will have a stronger currency. Why? Because everyone is coming to me, everyone is giving funds to me, right? It's like the demand and supply. Okay, when I'm heavy, who can maintain BOP? It's maintained with RBI. It's maintained with RBI by the government of India. Is here. Once again, I'll make it more simple. Okay, let's make it more simple. Don't get confused by all these words, BOT, BOP. Okay, it's very simple. In bank, what do you have? In our banks, what do we have? We have one account called as saving account and one account called as current account, isn't it? We have one saving account, one is current account. Okay. Import export, it's a business. So if I'll tell you to name this BOT, balance of trade, in terms of your banking account, which name will you give to this BOT, balance of trade? Which name will you give? Import export. Will you give the name of saving account or will you give the name of current account? Isn't it simple? Current account. Why current account? Because in current account we have business, isn't it? Same thing in BOT we have business. Okay, current account. Now I'll ask you about current account also. Okay, I'll ask you one question about current account. Say this. Suppose you are maintaining. Imagine you are a business person. You are maintaining this current account with your bank. Now in that current account, all the money which goes out and which comes in your business, It happens throughout the year, isn't it? Means you give it to your supplier, then your customer pays you, and the money gets credited into current account, right? So in the end of the year, March 31st, okay, 31st March, what happens? You have a credit credit there in that current account. Net credit. Net credit means after giving to the suppliers and receiving from your buyers. If you have a net credit of, let's say, 10 lakh rupees, okay, 10 lakh is your net credit in the current account. Okay. Whose money is this? This 10 lakh which is remaining at the end of March 31st. Okay, you are a proprietary firm, imagine. So whose money is this? This 10 lakhs. What will you do with this 10 lakhs? Whose income is this? This income is of yours, right? Because you are the business person, isn't it? So what will happen now? This 10 lakhs, which is lying in the 30 on the 31st March, right? It's your money. So what will you do? You will take that 10 lakhs from there and transfer it to your savings account. Because its savings account is yours, current account is of the business. So what are you doing over here also? You are transferring the BOT money excess into BOP, because BOP is like the savings account, BOT is like the current account. So in the end, current account's money is always transferred to the owner. Profit, whatever that profit is, okay? Depending on that company, that profit will be transferred to the owner. If it's a private limited company or limited company, the funds will be transferred to the shareholders as dividends. If it's a partnership company, it will be transferred to the partners, right? If it's a proprietorship, it will be transferred to the proprietor. Clear? Now same thing happens with BOP also. BOT money gets transferred in BOP. Got it clear now? Concept is clear? Yeah. No, it depends on bank to bank, company to company, BOT to BOP. It depends on what the government wants. It's like your same current account. Same current. If you are the current account holder, then you can definitely say that, okay, after 3 months, I'll transfer whatever is net in my account, I'll transfer it to my savings account. Because after all, it's your money. Same thing happens with government also. They'll say, as we want it, every month, every quarter, we'll transfer it. But whatever we'll transfer it, we'll keep a record of that. Okay. Okay, move on. Next is economic growth rate. What do you mean by economic growth rates here? Simple terms in economic growth rate are: number one, GDP, right? Second, GNP. And third term which has come in recently is EVA. This term is being added nowadays in EVA. Means earlier, before 5 years, everyone was looking at only GDP and GNP. But now they are looking at EVA also, economic value addition. Okay, surplus stronger the currency. Yeah. So if my here coming back to this, if balance of payment, the currency is surplus, I'm surplus. So I'm having huge money with me. So definitely my currency will be stronger because I can control the world in that case, isn't it? Same thing about economic growth. If my GDP is higher, means I'm growing at a fast pace. So definitely I'll be at a higher level. What is happening with China now? China's GDP is growing, means nowadays it's decreasing, but up to last year it was growing before COVID. It was growing heavily, right? So that's why it was the second largest world economy over here, right? What is happening to India now? India's growth rate is around 5.5 to 6. Even after COVID, right now, we are at a range of around 6%, plus or minus 1% here and there. Then also we are at a higher level than the world. So that's why our economic growth rate is heavy. Because of this, what happens? We become stronger. India is about to rule the world within coming next 10 to 25 years. Okay, because of the high GDP growth. What is GNP? GNP means gross national product. Understand one difference between this, um, the difference between GDP and GNP. GDP and GNP is like this city. Okay, means whatever happens in that country. Remember, one basic rule and difference I'll tell you. Whatever happens in India, in the boundaries of India, okay, that is considered as GDP. Now that can be done by Indian person or that can be done by a foreigner also within the boundaries of India. Means what? If some foreign company like what Ford Motors or Mercedes Benz, these are all foreign companies. They come to India, they manufacture over here, okay, and they sell it. So that is happening within India, make in India concept. So that will come under GDP. But what comes under GNP? GNP is a reverse concept. GNP means what? Whatever is done by Indians. Understand this. Whatever is done by Indians comes under GNP. Means what? Two, three examples. If Ford comes in India and works as a foreign company only and manufactures cars, that won't be considered under GNP. Okay? If any company which comes to India and registers itself as a foreign company only, then it won't be considered under GNP. But understand one more point which I am telling you now. If Ford registers itself as a WOS, wholly owned subsidiary. Now, what is this wholly owned subsidiary? Wholly owned subsidiary means Ford is a UK company, means England UK company or American company. Ford, yeah, American. But what happens when Ford comes to India? It registers in India as Ford India. So that becomes a separate company than Ford. So if that happens, then Ford India becomes an Indian company and that will be considered under GDP. Okay, simple rule. So whatever is done by the Indians is considered under GNP. Now one more question comes to your mind. If that Indian goes abroad, like Tata company, Tata is an Indian company. But what does Tata do? Tata sells in where? China also it sells. Then it has that what JLR, right? JLR car. So that JLR car is sold in UK. So even if that is sold in UK, okay, Ford India will come in GNP. Okay, Sujata. Ford India will come under GNP, but Ford USA won't come under GNP. Okay. So now if the Tata sells its cars in UK or China, that will also be counted under GNP. That will also be counted under GNP. Got it? If some NRI sends funds from abroad, he is working in USA, UK, Saudi Arabia, anywhere. He is sending the funds to India. That will come in GNP. That won't come in GDP. That will come in GNP. So got the logic? GDP and GNP. GDP is related to boundary, place, space. Okay. GNP is related to person, Indian person. Okay. And EVA means what? EVA is a totally new concept which has come up. Okay. EVA means what? Whatever I am bringing from some other country and I'm adding some value, only then it's considered under EVA. Because what happens is, I'll tell you one important part. Many in India also and many other countries also, what do? China is the production hub now of the world, means it is going down now. Of course, after that COVID situation, everyone is looking at China with what suspicion, right? But the point is, even now it's considered as a central hub for processing, right? Is any case considered as both GDP and GNP? Yeah, yeah. GDP and GNP both will be considered. If some Indian is working in India, means Tata company. Tata company will be for GDP also and GNP also, right? Because it's an Indian company working in India itself. So it will be there. It will be for both. Okay. Altogether is there. Yeah, the concept is there because we have to check who's Sujata. The question asked is, why do we have the concept of GDP and GNP? It should be only GDP because it's India. But no, it's not the point. There are many Indians working abroad also. Okay, so that's why GNP is required. And there are many foreign countries, companies working in India also because they are of no use to us actually. They are just giving the jobs and paying certain taxes, but the profits are taken by them to their foreign counterparts. Okay, so that's why both the concepts are required. Got it? Now EVA. EVA means what happens? Many of the persons just bring the goods from China put their own label and sell it, made in India. So that is also not allowed. You must do some EVA, value addition should be there. Only then it's considered under make in India. Okay, that's a new concept. So coming next to the next point is fiscal policy. Now again, this is a new part. There are two parts. Remember, fiscal and monetary. Many of us get confused between these two policies. There are three policies. Remember, always remember everyone. There are basically three policies in India. Three policies. Which one? One is fiscal, second is monetary, and third is what? Third is EXIM policy. EXIM, export import. Okay? EXIM policy. Always remember this. There are only three main policies in India related to finance, of course. Okay? So, there are only three main policies. EVA, yeah, it's just consider for EVA, consider only value addition. You have to add some value, only then it's of any use. Okay, that much. Nothing. Don't go in deep because it's not there for your CIB as of now. Only definition is there. So coming back, fiscal, monetary, and exim policy. Fiscal policy. Remember, who gives these policies? Everyone must understand this. Fiscal policy is given always by the government, finance ministry, finance. Okay, finance. Exim policy, monetary policy is always given by RBI. Okay, and exim policy is always given by the commerce ministry, commerce. Okay, commerce. We don't have exim policy in our studies. We have only fiscal and monetary policies. Okay, so only two policies are there. Sir, example of EVA. Yeah, EVA, there are many examples. See here, I'll give you a simple example. Okay, let me cover it later. First, let's cover this topic. Okay. Yeah. Fiscal means related to this government of India. So whenever we give the budget, that budget is under fiscal policy. Whenever RBI gives its that 2-month policy always, right? It changes the rates, everything. That is done under monetary policy. So fiscal policy means if it's an expansionary policy, again remember, there are two types of policies, there are two types of strategies in both the policies, fiscal and monetary. One is expansionary and second is contractionary. When fiscal is to be expanded, means when the government wants to expand, what does it do? It lowers the taxes. It will lower the taxes. Okay. If RBI wants to increase, it doesn't have tax in its hand. Tax is in the hands of the government. But what does RBI have in its hand? It has repo, right? Repo, CRR, right? And reverse repo. Repo means it includes reverse repo also. So it has these two things. So what will it do? If it has to go for expansionary policy, it will reduce these two. If government has to go for expansionary policy, it will reduce the taxes. Isn't it? So that's the way these two policies function. Remember always, fiscal is always governed by government, monetary is governed by RBI. The main tools in fiscal are taxes. The main tools in monetary are repo and CRR. Okay. And one more important part, monetary policy should always be supportive to fiscal policies. Here again, who is the boss? This is the boss. Fiscal is the boss, right? Boss. Fiscal is the main person. Monetary is to support fiscal. Similarly, over here, BOT and BOP. Boss is BOP. BOT is to support BOP. Okay. Net of BOT will go to BOP. Similarly, monetary also. Net of monetary is always given to fiscal only, because RBI is controlled by whom? Who controls RBI? Okay, tell me one thing about RBI, everyone. Is RBI a company or cooperative society or what it is? RBI. Yeah. Is RBI a company or what it is? Company? Means like Reliance and Tata, is it a company or is it some cooperative society or some company like NABARD? See here, everyone understand. Okay. RBI is a company. Company means similar to that of Reliance, similar to that of that NABARD, not NABARD, similar to that of Tata, all Wipro. It's like a company, but only difference is all the shares of RBI, all the shares of RBI are with the government. That's the only difference. If tomorrow government decides that the shares of RBI will be listed in the market, then RBI will be similar to that of that this what Reliance and Tata, isn't it? So that's why it's called a statutory company. Very good, Gokul. It's called as a statutory company. Statutory means what? Those who are companies, but the 100% of those shares are with the government. NABARD also, NABARD Bank. It's a bank basically, but complete shares of NABARD are with the RBI, with the government only, isn't it? So same logic over here. Okay, move on. Yeah, there was one question. Who had asked me? Reduce taxes, economic growth. How will it increase? Okay, and there was one more question on EVA. One example on EVA. Who Achu asked it. EVA means what? I'll give you a simple example. Suppose if I bring, okay, you had all these pharma companies right now. EVA, I'm giving an example of EVA to everyone. Huh? Somebody has asked me what is the example of EVA, economic value addition. Pharma, COVID, we saw all these things. COVID, all the vaccines, everything. What were those vaccines actually? See here, vaccines are always prepared from one basic ingredient that's called as API. API is the basic liquid on which the vaccine is prepared. But who has this API? API is never not done in any country in the world except China. China is the biggest producer of APIs. So what do we Indian companies do? Indian companies and all the companies in the world, they import that API from China, then prepare the medicines and then sell it. That's called as EVA. I'm importing some raw material, manufacturing it, doing some value addition, and then selling it. Okay, that's the point. Second point. Who was that second question? Reduce taxes and economic growth will increase. How will it increase? Here, once the taxes are reduced, always remember, once the taxes are reduced, what happens is all the businessmen will do more businesses in those areas where there are lesser taxes. So if there are more businesses, then definitely what will happen? People will get more jobs. Once people get more jobs, there will be more money flowing in the pockets of the people. So that's why that will increase the GDP. Okay, got it? Move on. Chalo. Yeah. Interest rates. Higher domestic interest rates tend to attract overseas capital. Thus, currency appreciates in the short term. Means higher domestic interest rate means what? Serious. Everyone amongst you, the one who is presently dealing in stock market, those who are having some money in stock market or those who are tracking the stock market, they might have found one important thing over here now. All the money is flowing from Indian market right now, moving out. Markets are down, isn't it, on a daily basis? Why are they down? What is happening? Because one reason was there. COVID is one reason which we have seen just now. But another reason is all the US central bank and UK central bank, even Japan, they are increasing their rates now. Basic rates means repo rates, you can call it. They are increasing the rates. If any country increases the rates, what happens is money tends to flow in that country because it's like that FD rate, simple FD rate. If any bank is increasing the FD rate, people will go more towards that bank for FDs, isn't it? Same thing is happening in these countries also. Country rates means these repo rates and the CRR are similar to that of the FD of that government. Okay. Once the repo increases, immediately the bond prices also increase. Okay. So bond prices decrease, rates increase. So once the rate increase, everyone tends to put their money in that country where the rates are getting higher. Okay. So that's why higher domestic interest rates tend to attract more overseas capital. Always remember this. Higher interest rate why do we have more FDI in India than in many other countries? Because India's domestic rates of bonds are around 6 to 7%. whereas the rates of bonds in US are roughly around what? Now they have increased to 2.53%, 2.5 roughly. Earlier they were only 0.5 and 1%. So that's why people were getting 1% over there, and here they were getting 6%. So definitely everyone will try to invest in 6%, isn't it? So interest rates, got it? Yeah. In the long term, however, interest rates slow the economy down, thus weakening the currency. So if I am having higher interest rates, definitely what will happen if my see this part in long run, if my interest rates are higher, what will happen? My economy will get slowed down. Okay. Always remember this logic. See here, if R means interest rates, R goes down. Interest rates means it includes repo, CRR, okay, and even bond rates, bond yields we call it yield, okay. If these go down, what goes up is GDP. GDP goes up. GDP plus what goes up? One negative. See here, this is the positive part. Positive, okay. Positive is GDP goes up, but there is also a negative to this. Inflation goes up. Inflation. Always remember, GDP and inflation go hand in hand. This is a negative part. So that's why RBI is always concerned about the balance of these two, GDP and inflation. It always tries to balance this because it gives a, if it reduces the R, repo rate and everything so down that GDP should increase heavily, but then inflation will increase heavily. There'll be huge people won't have money to buy anything, isn't it? Right? Yeah. So in the longer term, however, interest rates slow the economy down, thus weakening the currency. Now, what is this OMO and MSS? What is it? I have written it over here. What do you mean by OMO? See this. OMO means why have I written it over here? Because it is related to interest rates. OMO is open market operations, and MSS is market stabilization scheme. Now, what is this this marginal stabilization scheme? Okay. Now, what is this OMO? OMO means whenever RBI buys or sells. Okay, whenever this RBI buys or sells the bonds in the open market, secondary market. Okay. Now, what is secondary market? There are two markets always in any world. Okay. One is primary market. Second is secondary market. Primary means what? I'll give you a simple example. If you are getting some IPO you are having, you know, all everyone knows IPO of your banks also, various IPOs do come, right? And various companies IPOs are there. So whenever you get the shares directly from that company in IPO, okay, initial public offering, so that is the primary market. And what is the secondary market? How weakening of currency will happen? Okay, I'll explain that also. uh, what happens is, what is the secondary market? When you have the shares and you sell it to someone, that becomes a secondary market. So OMO always happens in the secondary market. I'll write it over here. Okay. OMO always happens in the secondary market. Secondary. It never happens in the primary market. Secondary market means buying and selling is done by RBI in the secondary market over here. But what is this MSS stabilization scheme? This happens when there is certain serious situation. Serious means what? Like presently, so COVID situations. Okay, now again the COVID is coming up, isn't it? We are seeing all the news on a daily basis now. So once this serious situations happen, then RBI enters into with the MSS scheme. MSS means what? It puts major hurdles so that the liquidity in the market gets either stopped or it increases as per the requirement. Okay. So what is this ISLM curve? See this ISLM curve, you will be having this separate topic of ISLM curve in ABM. ABM we have this separate topic of ISLM. Okay. Investment savings, and LM is what? Liquidity preference money supply. That's what we call. See this, I'll draw it over here. Okay. This is IS curve. IS. IS. Investment saving. I'll write it over here. Investment and saving. Okay. Savings. And what is LM? LM is liquidity. See this liquidity. Liquidity Preference. Preference is silent over here. Preference. Money supply. Money supply. Okay. You'll study this in ABM also, but I'll just give you one simple logic. Based on this, you will understand this ISLM curve in ABM also. See here, IS is always related to savers means salaried person, salaried. What do salaried persons do? Salaried persons do one simple job in their life. One is earn salary and put it in FD, or that's the only thing which they do in their life. Okay, they never do anything, any business, nothing. Okay, so IS is related to salaried persons. This is our rate of interest and this is growth. We'll call it GDP over here. GDP. Okay, so salaried person will only do one thing: take the salary and put it in the FDs or any investment opportunity. Okay, what is this LM? LM is related to businessmen. What does the businessman do? He always takes money from the savers. The money which you have saved in deposits is taken as a loan by this person. So he'll take the money from you and invest it in business. So remember the simple logic. If R goes down, rate of interest goes down, this salaried person will say, oh, lesser interest I am getting. So he'll try to invest less in this. Isn't it? That's why it's sloping downwards. What will the businessman do? He'll go in the reverse way. If R is going down, he'll say, oh, good. R is going down. So I'll take more loans from the bank. So he'll try to take more loans from the bank. Okay. And this RBI always balances this ISLM curve over here. Whatever is the common point, that is always the CRR or whichever R they are taking. See, this R can be different. This R can be repo rate. This R can be CRR. It can be bank rate, depending on what this curve is drawn. So RBI will always try to balance this, and this point of equilibrium will be considered by RBI as interest rates. Okay. Got this point, everyone? Yeah. What is this next part? What are the questions? Let me see. Any other questions? Tell me how weakening of the currency will happening. Weakening of the currency means, okay, keep it very simple. How currency will get weakened in any country? Currency will get weakened if, number one, that country does not do any work. Okay, does not do any work. Many of the European countries right now, they are going in this weakening concept. Why? Because they had the social concept over there. See, there are two types of economies, isn't it? One is capitalist economy and second is social economy, right? What does the social economy say? Social economy says everything will be provided by the government. Everything. Your basic livelihood will be provided by the government. Everything will be provided. So in that case, what happens in socialist economy? Always the country goes down and currency gets weakened. What happened in Venezuela? Same thing happened. In South American countries, South American I am talking, okay? These all went into socialist economies. Same thing is happening with Europe also. Even Europe is a capitalist economy, but many of them are working at the socialist economy. Means all that you might have heard from your near and dear ones who are living in UK and USA. They will say, USA is so good, UK is so good. They are giving that what pension and subsidies to those who are not having the jobs, isn't it? They are giving that all this. So what is that? That is a socialist economy. What happens because of that? Because of that, one simple thing happens. If you don't have a job, you will say, okay, what to worry? Government is giving me money, so I don't do work. So this way, the currency of any country gets weakened. Okay, that is the fundamental reason. Okay. Next question is what? Government securities sell through OMO. Yeah. Government securities are sold through OMO. Always. Okay. OMO means open market operations. It includes sell and buy both. Okay. But MSS is mainly related to sales here. What I had written it over here serious, but I forgot to mention one thing. Under MSS, RBI only sells. RBI never buys in MSS. In OMO, it buys and sells both. Buy and sell both in OMO. But MSS, it only sells. Sales means what? Here, understand one simple logic. This selling, buying. You'll say, sir, what is all this? I'll give you a simple logic behind this. It's again the business of sabji wala, vegetable vendor. What do you do in sabji wala business? You take sabji from that guy. Sabji, okay? You take sabji from that guy and you give money, isn't it? So sabji you take and money you give, isn't it? Same thing is done by RBI. RBI, instead of sabji, it says bonds. In OMO, it gives the bonds and takes money, or it takes the bonds and gives money. Again, the sabji wala concept in OMO. But in MSS, it only gives the bonds and takes money. See this, understand the concept. It takes money. Takes money means what? It, if there is a huge liquidity in the market, liquidity means what? Inflation is higher. Liquidity means what? Everyone is having huge money in their pocket. So what happens? Inflation increases. Now RBI wants to decrease that inflation, control that inflation. So what will it do? It will come under MSS scheme. It will say, oh, nothing doing. I am selling all my bonds. Take these bonds. Give me back my money. So all money will be dried up from the banks. Who will purchase these bonds? Banks will purchase these bonds. So banks purchase these bonds and give money to RBI. So our banks won't have the money now. If they don't have the money, how will they give the loans? Right? So this way, in the economy, the liquidity dries up. Okay, that is one point. So what was the next question? Sufficient? No, no. OMO has the limitations of itself. RBI can't do OMO beyond certain limit. Okay, there are restrictions on OMO. Okay, what was the second part? FD rate and loan rate always have more difference. Yeah, obviously. FD rate and loan rate, it will be definitely there. Okay, they are linked to some extent, not to all extent. Okay, always loan rate will be 1 or 2% higher than the FD rate. Generally, I'm talking. Huh? If you see your bank also, the FD rates in your bank and the loan rates of your bank will be hardly 2% difference. Okay, that's called as NIM, net interest margin, isn't it? So that's why NIM is the basic bread and butter of any bank, isn't it? Where do you get your salaries from? Huh? You get your salaries from that NIM. What is NIM? Everyone knows NIM, no? NIM, net interest margin. Shall I remove everything? Okay. One sec. Let me remove these things. Okay. What is NIM? Let me come to this part as this question is asked. NIM means what? It's a difference from what? Deposit and loans, right? The difference between them, if deposit is 7%, loan is 9%, right? So my NIM is 2%. NIM, right? In this NIM, what is given? All that salaries of my employees plus what? All those expenses means what? MSAB bill or electricity bill, all that rents, everything is adjusted over here only, isn't it? So that's why this FD and loans will always be related in to some extent. Okay, but nowadays what has happened is these loans are directly linked to repo. Many of the loans in the banks are directly linked to repo. Even deposits are nowadays linked to repo. Means SBI, if you check SBI and PNB, they have linked their all rates to repo. Major rates, not all actually, major loans and deposit rates. Okay. Now let's come to the last part. Last part is political issues. Political issues means what? It's called as pestle analysis. What is pestle analysis? I'll tell you that also. Say this. Political stability is likely to lead to economic stability and hence a steady currency, while political instability would have the opposite effect. Now, what do you mean by this? Okay. What is happening in Sri Lanka? What is happening in Sri Lanka now? Are you, suppose if I tell you, okay, I tell you tomorrow, what you do is, uh, you invest your 10 lakh rupees in Sri Lanka, some business. Will you invest it? No. Why? Because you know what is going on in Sri Lanka. If I tell you invest in what that Pakistan, will you invest it? No. Because you know there is a political instability over there. South African countries, will you invest it? No. Right? Why? Because political instability. Afghanistan, I tell you to invest it in Afghanistan. Will you invest? No. Why? Because political instability. Everyone in any country, if there is a political stability, everyone tries to invest in those countries, because what happens if there is a political stability, means majority government, then what happens? Everyone feels secured about this, that the policies of one government will continue to the next level also. Same thing is happening in India, right? Majority government, 303 seats, right? Yeah. If you have a majority government in any country, what happens is the policies by that government are always stable because they have a full majority and they can take those decisions to the end. Means idea to implementation, we call it, right? Idea is very good with any government, but implementation is difficult if you don't have a majority government, if there is a political instability. So that's why we are coming to this part of pestle. What is this pestle? I have written something. What is this pestle? Here, any country when you invest in, you always look at these six parts, these six things. What are these six things? Say this. P means politics, political situation, political. Okay. Second is E, economical. Economical means financial situation of that country. Okay. Economical. Third is social. Social means what is the social level of that country. Okay. Social level means how the people are cooperative. What is the freedom in that country. Okay. Fourth is technological advancement. What is the technological advancement in that country? Okay. Technological. For now, these two things have come up recently. That is environmental. Environmental. What? Environ. I have wrong spelling. Environmental. And last one is legal. Okay. Legal. These six things are always checked by any investor in investing, and these will always affect the currency also. Why? Because if the pestle is low, means politically is highly unstable, economically country is fragile, socially country is not having that freedom, technological, yeah, and environmental means now climate change. Environment means climate now. Everything is related to climate now, and legal means what are the legal laws. Okay, if these are not in a positive shape, nobody will invest in that country. So if nobody will invest in that country, there won't be any companies. The currency will get weaker. Okay. If nobody invests in your country, your currency gets too weak. I'll give you a few examples of weak currency. Zimbabwe. Do you know what the story of Zimbabwe is now, presently? Their president, Mugabe, was the earlier president. He died now. What did Mugabe do? Somebody told Mugabe that, see, we have huge poverty in our country. So he said, okay, huge poverty? Why is that power? Why is that? Why are the people poor? He said, no money. No money. So simple. Print the money. He printed all the money. Zimbabwe had a note of rupees, I mean Zimbabwean dollars of 10 lakh dollars. 10 lakh Zimbabwean dollars. They had one note. Whereas the common public didn't have even one Zimbabwean dollar to eat. So these things, when the political situations are so uncertain and somebody is so foolish in any country, that country will surely go to drains. Okay. Similarly, social and economical, all these things. Are you ready to invest in Afghanistan? Simple example. If I tell you to invest in Afghanistan, you will never invest over there, right? Why? Because economic and social positions are down. If there is no investment, how will the companies grow? If the companies don't grow, how will your currency grow? Currency always goes stronger if your growth is faster. And growth is faster if people are investing with you. Isn't it? Simple. Chalo, we'll stop over here. Those who are watching this on YouTube for free session, as a free session for first time, okay? Some videos are given as a free session for first time. So those guys kindly share this. This is for the newcomers, okay? Those who are in the class, it's okay for them. So YouTube as a free session, kindly click on JAIIB and CAIIB. Go to Adda 24/7. You will be getting the discounts, and you can join these classes immediately, okay? So go to this JIB and CIB. You can go to the JIB CIB Mahapak CIB 23 batches. Click on this CIB 23 batches. Okay. CIB 2023 batches. See this. Once you go there, you'll see the batches over there. English, bilingual, anything. Okay. You can join as per your requirement. So English batch. This is the batch we are in right now. You can go through the details of this batch. Everyone. Okay. Go through all the details. We'll be covering all the numericals, objective questions, whatever is required over here. Okay. Now look at the fees part. The fees part is 23,999. Okay. Just 23,999. Click on view offers. Don't pay such a huge fees. Okay. Click on view offers. Put this code Y432. Y432. Click on apply. Say this. You'll be getting 80% off over here. Means 23,999 reduces to 4,799. So go for it immediately, isn't it? You can also go for the Mahapak. You'll be getting many batches over here, right? 3 to 4 batches you get it in Mahapak only. Okay. Click on this Mahapak. You'll see all the batches over here. CIB ka Mahapak, and again you'll get the same discounts. See this 35,996. Click over here. See this all the batches details. You can go through it. Okay. So importantly, all of you are getting this recorded videos also. Those who are in the batch, kindly note you'll be having the recorded videos also over here. Okay. If you miss out on any class, you can get the recorded videos of this. Put the code Y432. Now look at the fees also. 35,996. This Mahapak fees reduces to 7,199. Validity is 6 plus 6 months, double validity. So go for it immediately, isn't it? Chalo. I'll stop over here now, guys. Okay. Yeah, bilingual, just check with the admin parts. Okay. Yeah. Just check with the admin. Yeah. Fees are given as per the whatever is given on that website only. And if you're having the app, I would say go through the app. You will get 1% extra benefit. Okay. Chalo, bye. Hope so you have enjoyed it today. Okay. Yeah. Every day you'll be getting some new concepts in my lecture. Every day. Every day. Okay. Chalo, bye.